The United States is going bankrupt. Hey guys, what's going on? Jebb here, and in today's video, we're going to be talking about how the United States is going bankrupt. With national debt soaring, inflation stagflationing, and funds rates hiking, fear in the United States economy has hit a new all-time high. Today, let's discuss how and why the United States is going bankrupt, how our inflation nation is leading to the cessation of the Bitcoin bear's resignation, and how all of that will impact the Bitcoin market in the coming weeks. Without much further ado, let's go ahead and dive right on into it. You've heard it in the news, everybody's talking about this thing called the debt ceiling, but what is a debt ceiling? Let's explain by way of analogy. The United States federal government is a little bit like this family who make $180,000 a year, but they spend $50,000 a year just in childcare tuition for two toddlers, and now the mom and dad are thinking about taking out debt to continue paying for their lifestyle even though they make $180,000 a year. The United States federal government brings in about $4.6 trillion a year, which should be enough to cover all of its liabilities, but the United States federal budget also requires it to spend $6.1 trillion, leading to a $1.476 trillion budgetary deficit every single year and growing. That massive budget deficit led by excess spending, similar to spending $50,000 a year on childcare tuition for two kids, I think you can go to college for less money than that. The US government makes a lot of money, but it spends even more. To make up the difference, the United States government takes on debt to the tune of $1.5 trillion every single year. But there's a self-imposed limit on how much debt the United States government can take on. That self-imposed limit is called the debt ceiling, and it currently sits at $31.4 trillion. The trouble is the United States federal government has already far surpassed that debt limit at $31.4 trillion because the U.S. national debt is sitting at $31.8. Janet Yellen, the United States Treasury Secretary, has been attempting to make ends meet even though she's not able to take on more debts, which she is forced to do because Congress allows for us to run a budgetary deficit. And according to Janet Yellen, we have until June 5th before she runs out of money to pay all of the United States government's obligations. That would mean VA benefits, Social Security benefits, pay for government employees, and everything would have to be triaged. The government would have to decide what's more important and cut $1.5 trillion worth of expenditure overnight, or go into default. You see, the U.S. debt limit acts a little bit like a credit card, and the person using the credit card, the U.S. government, acts like an irresponsible teenager that just got one for the first time. The teenager is spending more money than they are taking in, and so they're left with three options. Either number one, they can make more money. Number two, they can spend less money. Or number three, they can increase the credit card limit and continue taking loans out from the credit card because they now have a higher line of credit. That's what the U.S. government is doing every single year when this becomes an issue. Instead of raising expenditure by raising taxes or cutting the deficit by cutting expenditure, the government just kicks the can down the road by raising the debt ceiling. This debt ceiling then therefore becomes a political football between fiscal conservatives who want to cut expenditure and liberals that want to increase expenditure while also increasing taxes. And that's the exact position that we're in right now. There has become a showdown between Democratic President Joe Biden and Republican House Speaker Kevin McCarthy. House Speaker Kevin McCarthy leads a theoretically coalition of fiscal conservatives that want to get the budget under control. Joe Biden leads the Democrats, who are much more inclined to spend more money and just raise the deficit even farther. Kevin McCarthy and Joe Biden have been going back and forth for weeks trying to reach some kind of agreement that would raise the debt limit, stopping the United States government from entering into a default. Just a couple of days ago, Speaker McCarthy tweeted this: "I just got off the phone with the president a bit ago. After he wasted time and refused to negotiate for months, we've come to an agreement in principle that is worthy of the American people." It seems that there's a last-minute agreement coming through, and there more than likely will be. Nobody on Capitol Hill wants to be the person that caused the entire global economy to collapse, but the uncertainty of whether or not that will occur is hanging over the Bitcoin, cryptocurrency, and stock market like a dark cloud. And for good reason. Treasury Secretary Janet Yellen says a U.S. default would trigger a global economic downturn, and Moody's predicts that a default would lead to 6 million jobs lost, $12 trillion in household wealth evaporating, and 4% of gross domestic product disappearing. On top of that, that would lead to a complete demise of United States treasuries, which are widely considered to be the safest investment you can possibly make. A default on U.S. debt would be the destruction of the United States economy and would send shockwaves through geopolitics for the rest of the century. Basically, it'd be the movie 2012 meets The Big Short. But the debt ceiling is likely to have an agreement reached on in the next couple of days, and then after that comes through, we'll likely see a rally on the stock market, which will then lead to a rally on Bitcoin. However, it's not all sunshine and rainbows after that happens because we're still having to deal with CPI. You see, the Consumer Price Index is a metric that tracks inflation in the United States economy and everything from shelter to gasoline to natural gas or electricity to eggs. And then CPI is broken up into two categories. Number one, all items, items, and number 2, all items minus food and energy. While all items has been coming down nicely to 4.9%, all items less food and energy currently sits at 5.5%, and its drop has completely stagnated over the course of the last 5 months. CPI dropping is a very good thing, but the problem is all items and core inflation, that being all items minus food and energy, have both started to stagnate right around 5%, and this season of inflation coming down very aggressively is likely to be over starting this month when the next data comes out on June 13th. In fact, many economists are predicting that inflation is going to get a lot stickier under the 5% mark for all items and for core inflation, and that's very important because that impacts Jerome Powell's Fed's decision on effective federal funds rate hikes. You see, the effective federal funds rate is described by the New York Fed like this. The effective federal funds rate is calculated as a volume-weighted median of overnight federal funds transactions. In English, the effective federal funds rate is more or less the base rate that all other interest rates in the United States economy are based off of. That includes car loans, home loans, personal loans, commercial loans, and pretty much any other kind of loan, including credit card loans. Whenever the effective federal funds rate increases, then that causes every single other interest rate to increase, which increase the cost of taking on debt, which reduces the amount of liquidity in the United States market and makes it harder to expand because we live in a credit and debt-based society. The Fed has been hiking rates at their fastest rate in over 40 years in a Hail Mary attempt to try and get inflation under control. The problem is that inflation is not going down anymore because of the hiking interest rates. It's staying sticky at 5% because of various geopolitical realities that the Fed has no power over. Whereas many of us were hoping for a Fed rate pause come June 14th when the meeting happens, now many people, including myself, are predicting that we're going to see another 25 basis point rate hike from 5.15% all the way up to 5.4. Another rate hike when we were hoping for a pause would almost certainly lead to a major drop in Bitcoin, especially considering the rate decision will come out the day after CPI comes out, which is likely to be lackluster. In conclusion, Bitcoin has been looking forward to a very bullish June as a result of a recent Lux Algo buy signal and a bullish cross on MACD followed by a bullish cross above the 50 level on RSI. However, as a result of the uncertainty around the debt ceiling, we've seen timidity coming from the United States stock market as it attempts to break above critical resistance at $420. That timidity has spilled over into Bitcoin and means that it's having a hard time going into a rally as well. That timidity on US stocks is going to continue until we reach a decision on the debt ceiling hike because many people are predicting if a decision does not get made and the United States defaults on its debt, the stock market could drop by over 45%, $20 trillion. And while there is most likely going to be a decision reached, which will lead to that timidity vanishing in the United States stock market, just a week after that decision is probably going to be reached on June 5th or 6th, then we're probably going to see bearish data coming from CPI, and the very next day on June 14th, we're going to see a Fed rate hike when we were hoping for a pause. All of that to mean that the first 2 weeks of June are shaping up to actually be very difficult for Bitcoin, and if we see any bullishness from Bitcoin, we should take that as a great sign of the health of the market because it's got so many things standing in its way right now. But the thing I want you guys to remember is that these dark clouds are temporary. A decision on the debt ceiling will be made in the next week, and the decision that seems to be taking place will kick the can down the road for another 2 years, and we won't have to worry about it until January of 2025. On top of that, while CPI is likely to remain sticky around 5%, after the Fed likely raises rates to 5.4%, they're probably going to pause. Maybe they'll do one more rate hike to 5.65, but at that point, they'll almost certainly pause. That means within the next 3 months, we are likely to see a Fed rate pause, which will hopefully bring some bullish sentiment and hope back to Bitcoin. All of these dark clouds very well may make it very difficult for Bitcoin to rally over the next 2 weeks, but hopefully, it will set up Bitcoin to go into a rally over the next 2 months following June 14th's decision because Bitcoin will be in a better position technically, having built massive amounts of support and having some of the way cleared for it to go to the upside towards price targets around $30,000 to $33,000. As we wait, continue to invest in dollar cost average into Bitcoin if you believe that that is an investment vehicle that you want to have as part of your strategy. Continue to learn about principles of technical analysis in Club DeFi's Principles of Technical Analysis. You can find the link for that down below. Make sure to continue keeping an eye on Lux Algo because it's going to give you great signals. You can use coupon code Jebb30, Jebb30 for 30% off a checkout. With that, save yourself up to $500 a year using that coupon code and continue to put yourself in the best possible position to build yourself financial sovereignty by first investing in your education and learning how to invest in these markets by subscribing to the YouTube channel, hitting that post notification bell so you won't miss a single Climate of Crypto episode. I hope you guys really did enjoy this Climate of Crypto episode. Make sure to check out our playlist because we make these videos every single week. I want you guys to know what's coming next for the Bitcoin and cryptocurrency market. As for last week's giveaway, I'm going to go ahead and pick Gary Nicklow, who said the Svalbard Global Seed Vault. I love that building also. It looks like this. You've probably seen pictures before. And it houses backups for all the seeds that are needed for modern agriculture in case some kind of nuclear winter or something destroyed everything that we had agriculturally. I think that is a very cool building, and so you will be getting your giveaway sent to your Bitcoin address that you left in your comment. I'm gonna go ahead and go, but before I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.